Welcome everyone to this month's technical meeting, which is also a public lecture. Our guest speaker is already on the call, but maybe we should give another 5 minutes before we kick off the agenda for the evening. Thank you. Okay, good afternoon. Good evening again, everyone. With the permission of our of our branch chairman, Engineer Dr. Ayub, can we go ahead, sir?
Please, let's start, please. Let's start.
Okay, so thank you everyone again for attending this session this evening. We'll now start with the opening prayers, which is our national anthem. Hello.
Nigeria, we hail thee, our own native land. No tribe and tongue may differ, in brotherhood we stand. Nigerians all and proud to serve our sovereign motherland. Our flag shall be a symbol that truth and justice reign, in peace or battle or honor, and this we count as gain. To hand unto our children a banner without stain. O God of all creation, grant this our one request. Help us to build a nation where no man is oppressed, and so with peace and plenty Nigeria may be blessed.
Thank you, everyone. The next item on the agenda is the opening remarks by the branch chairman, Engineer Dr. Ayuba.
Thank you very much for inviting me. Am I audible?
Very clear, sir.
My IPC, ESCO members, fellows in the house today, dear engineers, distinguished ladies and gentlemen, Assalamu alaikum and good day to you all. Today, we gathered to discuss Nigeria's new tax reforms, implication for individuals, businesses, and diaspora. When we hear the word tax, many of us suddenly develop selective hearing. Some say, that will not concern me. Others will say, my company will handle it. But the truth is, tax concerns all of us. Nigerians' new tax reforms are not just policy adjustment. They will affect how much we earn, how much we keep, how businesses operate, and even how the diaspora sends money home. For individuals, it's going to touch your salary, your side hustle, and your investment. For businesses, it will affect compliance, operating costs, and long-term sustainability. And for the diasporas, it could influence your remittances, reporting obligation, and cross-border tax exposure. Let me share something practical to see why today's lecture is very important. I once asked a colleague whether he had taken time to understand how the new tax reforms might affect him. He smiled and said, as long as alert enters, I'm fine. That is a classic Nigerian optimism. But tax reforms does not work on vibes. It works on structure, policy, and enforcement. If you don't understand it, we may lose money quietly, miss opportunities silently, and face compliance issues unexpectedly. The reality is simple. Tax reform is here. It will shape our economic future. The only question is, will we understand it well enough to position ourselves wisely? Because when it comes to tax, what you don't know doesn't just hurt, it deducts. And as we say in Nigeria, no be everything wey sweet go better. Even your sweet salary can reduce quietly if you don't understand what is being deducted. So before the next alert, make sure you know what entered and what left. That is how to enjoy your money with sense. So today, let's move from ignorance to insight. Let us ask questions. Let us understand the reforms. Let us position ourselves properly. With this said, I wish you all a fulfilling engagement with our seasoned guest lecturer. Thank you for being here, and over to you, Engineer Dr. Abatoke, to proceed with today's public lecture. Thank you.
Thank you so much, my branch chairman. And in the next 2 minutes, I will read out the speaker's citation. Please permit, don't mind the coarseness of my voice. I have a little bit of cold and cough, so I may be, coughing periodically. We welcome you, Dr. Joseph Oluyori, to our midst today. You will be our guest lecturer this evening. Dr. Joseph Oluyori is an accomplished chartered accountant and certified information systems auditor with over 2 decades of progressive experience in internal auditing, financial management, risk assessment, and public sector accountability. He served as the Assistant Director of Audits at the University of Ibadan. He holds a PhD in accounting from Ekiti State University, an MSc in accounting from Olabisi Onabanjo University, Agoiwoye, an MBA from Ekiti State University, and a BSc in accounting from the University of Ado Ekiti. He is a fellow of the Institute of Chartered Accountants of Nigeria and a certified information systems auditor from the United States. He currently serves as the Vice Chairman of ISACA, the Ibadan chapter, and is a member of the ICANN Data and Technology Faculty. He is also an Assistant Examiner for Strategic Financial Management with ICANN for over a decade. His career trajectory spans key roles in academia, healthcare, agricultural research, and public service. Notably, he served as Deputy Director and Head of Internal Audit at the Institute of Agricultural Research and Training at Ibadan, and previously held senior financial roles at the Obafemi Awolowo University Teaching Hospital, the Office of the Accountant General, and the now defunct Omega Bank PLC. Across these roles, he demonstrated excellence in internal controls, systems, tax optimization, audit reform, and financial recovery. In addition to his professional engagements, Dr. Oluyori is an active researcher and has co-authored several peer-reviewed journal articles on IPSAS, public financial management, audit quality, cost control, and related topics. His outstanding contributions to the accounting profession has earned him multiple commendations, promotions, and awards from institutional and governmental bodies. He has attended numerous training programs and workshops, both locally and internationally, which have strengthened his expertise in risk-based auditing, information systems governance, cybersecurity, and public financial management. Furthermore, he has presented research papers at various national and international conferences, contributing valuable insights on audit quality, internal controls, IPSAS implementation, and public sector reform. Dr. Oluyori is a principled, analytical, and highly committed professional with a deep passion for transparency, accountability, and continuous improvement in public finance and institutional governance. Dr. Oluyori, we welcome you to our midst today, and we are eagerly expecting your presentation. You now have the floor.
Good evening, ladies and gentlemen. Please, am I audible?
You are very audible, sir. We can hear you loud and clear. Yeah.
Okay, please permit me to share my slide. Good evening, ladies and gentlemen. I'm going to speak to us for some minutes on the on Nigerian new tax reform and the implication of the reform for individual businesses and also for the diaspora. Please, am I audible?
Yes, loud and clear, sir.
Okay. Now, the outline is like this. We have the introduction, then I will look at the implications for individual taxpayers, for SMEs, then large company. I will consider the cross-border and international tax issues, then Nigeria in the diaspora, compliance, enforcement, and administration. Then we'll look at the opportunity, challenges, and strategic response. Then we'll consider the penalties under the new tax law. Then if there is any question, I will willingly take it. Introduction. 4 major tax were actually passed into law in 2025. But the one that actually concerned the public is the Nigerian Tax Act. There are also that 3 1 concerning the professional, There's another one for joint tax board, but the one that actually drew the attention of the public is that of the Nigerian Tax Act. And this law came into being, it came into existence from January 1st this year. Meanwhile, the other three had come into law around June last year. But that of the Nigerian Tax Act, which concerned the public, actually came into force on January 1st this year. And the reason for this is just to modernize our tax system, to simplify and digitize our tax system. At the same time, to broaden our tax base and eventually to boost revenue, which we can use for infrastructure. Now, you will ask me, why are we reforming our tax system? Because it's public, there's a public saying that if it's not broken, you don't fix it. Our tax system was not conducive for growth. One of the instruments for growth in any economy is taxation. And if you find out the nations that are doing very well, they have a very good tax system. But unlike the one we were having in Nigeria before now, it is not a very good one for economic growth. Then we have multiplicity of taxes. As a consultant, I pity businesses sometimes when I look at their records. You know, at the last count, we have over 150 type of taxes, both at the federal, states, and local government. And several agencies are collecting taxes from people. Sometimes you'll be driving along the road, somebody will come and they will just put a log of wood on the road. You have to pay. And sometimes you pay a certain amount of money in a state, you are going to another state, you'll be asked to pay the same money. So we have all manners of taxes in our country. Then it's been discovered that a lot of funds were escaping taxation. How do I know this? I will tell you in subsequent slides. You know, we are not performing well in terms of taxation. And one of the reasons for reforming our tax system is for us to broaden our tax base so that we can bring more people into the tax net. Then another reason behind this reform is that the tax law we were using before could tax the seed. And what do I mean? You know, in one of the percentage, 0.05%. Now, you will agree with me that it's not all the time that somebody has turnover that it will make profit. But with this kind of tax system, whether you make profit or not, you are expected to pay something in form of taxation. So it's like you are taxing the capital and investment. Then when we look at our tax system before now, it was not in alignment with the global tax norms. What happened in the Sena climes, we don't have the same thing in our economy. And most of our taxes, our tax laws, they were archaic. Many of them were passed into law before independence, and they were ambiguous. Now, like I told you, one of the reasons for this taxation is the fact that our tax to GDP ratio was very low. The last one by the IMF, that was in 2023, we have 9.4%. That shows that a lot of, whereas, country of our economy should be doing nothing less than 18 or 22. The implication of that is that a lot of fund is escaping taxation. So many people were collecting money, but they were not being taxed. And that which is why we cannot really compare our economy with that of other countries of the world. Then if we look at our economy, we discover that 70% of our revenue was still from oil. And one thing with oil is that we are susceptible to variances that come with oil quantity and prices. You still remember that during the time of Jonathan, that we had crisis at the Niger Delta. At a point, what we were getting from oil went so down that it was difficult for it to sustain our economy. But we cannot continue in this manner. We just need to review our system in such a way that we will be independent of oil and we can still run our economy very well. Then another reason is that in 2025 alone, government needed to borrow more than 11 trillion to fund the capital project. And this was as a result of revenue shortfalls. So we still have a lot of infrastructure that we could not embark on because we don't have enough money. As a matter of fact, even the budget, despite the amount we borrow, we could not fund the budget because what came into the government cover was far less than what is needed to fund the budget. Unlike what happened in other countries of the world, where taxes came in, formed the huge part of their revenue from which they were able to service other things, like you will see in the next slide. Now, if you take African country, for instance, in the new reform now, our tax is 7.5, but in country like Kenya, the rate of tax, VAT rate is 16%, while Ghana is doing 15%. In South Africa, it is 15%. For airtime, if you buy airtime in Nigeria, you don't pay any taxes. But in Kenya, if you buy airtime, you pay like 15%. In Ghana, very close to us, you pay 5%. In South Africa, you don't pay any. Now, top personal tax rate, we are talking of the last band, the highest the highest rate in Nigeria for personal tax is 25%. But if you go to somewhere like Kenya, their own is 35%. In Ghana, it is 35%. And in South Africa, it is 45%. With this new tax reform, small company in Nigeria will not pay any form of taxation. But in Kenya, they will pay 3% of their turnover, while in Ghana, they pay 3%, but in South Africa, they will not pay. For large company in Nigeria, some will pay 25%, while some will pay 30%. In Kenya, they pay 30%. In Ghana, it is 25%, while in South Africa, it is 27%. When you look at these are even as a result of the reform. What we were having before now was very, very poor. So it is not something that is comparable with any economy of the world. Now, that is the reason, the essence of this reform. So this reform was introduced to modernize our tax administration. We still run, archaic form of tax system. Somebody will need to to file tax return. You need to take physical document to FRS office in this age and time. So, but this reform intends to modernize our tax system, and that is why every taxable individual is expected to get in. And now it has been even made easy. What they are going to do, what they intend to do is to synchronize our BVN for TIN to ensure transparency and compliance. That's why under Section 8 of the Nigerian Tax Act, it says financial institutions are required to demand a tax ID from every taxable person. The implication of that is that if you go to your bank now to open, any account, you are expected to attach your TIN with that account. For some time, they've been enforcing that for businesses, but for individual accounts, they have not been doing that. Even though as time goes on, what they intend doing is to synchronize our BVN in such a way together. And the reason for this is for us to be captured, everybody will be captured into the tax net. Then, like I told us, a lot of taxation, a lot of income is escaping taxation in Nigeria. Now, the reform has broadened our tax base. Now, you will agree with me, in this age and time, we now have digital revenue. A lot of people sit down in their homes and they are making a lot of money now, and which were not being taxed because our tax system before now was it is not a digital one. So we didn't consider all those things like cryptocurrencies, Bitcoin. I mean, it didn't consider it. But now with this new tax reform, the intention is to broaden the tax base. Then to support SMEs and investment. It's been discovered that SMEs, they have tendency of even hiring a lot of people, generating more revenue. You can generate more revenue. Countries that are doing very well have been found to support SMEs because they can employ a lot of people. Government, we employ limited people. Structured businesses, we employ limited people. But SME, we employ a lot of people, 70% of the population. And the establishment of the Office of Tax Ombudsman, which I will explain later. Now, that's why we now have key reforms to promote fairness, progressivity, to broaden our tax base, to improve ease of compliance, to ensure that our tax system align with that of the global standard, then to ensure that there is low income earners, they pay less, while high earners, they pay large corporate, they pay less, and large or corporate company, they will pay more. Then to ensure that our taxes align with that of OECD, that is the organization that is in charge of the economy of the world. Now, let me go to individual taxpayer. This reform for anybody that is anything less than 800,000 per annum, they are now fully exempt from any form of personal income tax. So if your annual income is less than 800,000, you are not to pay anything. And the reason is so that you can be protected. The tax law has been designed to protect low income earners. Then they now have new tax band, unlike before. You know, the tax system before, the band was awkward, and it is not even easily understandable by people who are not account oriented. But the new one has been designed in such a way that you don't need to be an accountant to understand. And you now pay more. The more you earn, the more you pay. Then in this new reform for individual, you now have your rent relief up to 500,000. So you can claim your rent back, and other exemptions like compensation for loss of employment. For anybody that loses a job, he has compensation, and for injury. Then there's something we have in the old Personal Income Tax Act. We call the Consolidated Relief Allowance. You know, some of these things, they make it difficult for somebody to compute taxation. Anybody who is not an accountant will find it a bit difficult. I've seen a lot of people sending to me, they are paying their client, they want to know how much they will deduct, because it's not a straightforward calculation. So with this new law, that has been abolished, and a straightforward calculation has been entrenched into the tax law. You can see the table now. So if you are earning from 0 to 800,000 naira per annum, the person will not pay any form of taxation. But anything 800,001 up to 3 million, the person is going to pay 15%. If the person is earning 3 million and 1 naira up to 12 million per annum, he will pay 18%. 12 million and 1 up to 25 million, the person will pay 21%. While 25 million and 1 up to 50 million, the person is going to pay 23% as tax. Anything above 50 million, the person is going to pay 25%. Now, if you compare this with the old law, you will discover that for people who are earning less than 2 million per month, they have their taxation reduced. And for those who are earning 2 million and above per month, they have marginal increase in what they pay, which is in consonance with what happens all over the world. People in the Senate climb, they will agree with me that as you earn more, you pay more taxation. We see a situation that somebody will even refuse a promotion on the basis that it's going to pay more taxation. So you collect more from those who are having to take care of people who are not having much. Because one of the essence of taxation is redistribution of income to ensure that you maintain a fair balance among the populace. Now, the new tax law have merged multiple levies into one system so that we can simplify compliance from this year. And low-income earners, small businesses, they are going to pay nothing, while higher earners and large firms, they will pay more. Then, unlike, when this law first came into being, a lot of people were jittery, saying all manners of things on the social media. If you transfer money to somebody, they are going to tax it. But I want to tell you that bank transfer will not be taxed automatically, especially once it's not for business. Once you have paid your normal taxes, they are not going to tax it. Even when such money is due for taxation, there are processes. It's not that anybody cannot just sit down and deduct your money from your bank. No, it doesn't work like that. Now, one of the things this taxation has done, like I told you, is to broaden the tax base. And how has it achieved this? Is by broadening the definition of taxable income. I told you that before now, there are a lot of income that was not captured. So, but with this new law, in section 4 of the new Nigerian Tax Act, there are a lot of things that he has brought in. For instance, discounts, rebates, prices. If you have won prices now, you are going to pay taxes on it. Winnings, honoraria, grants, award. Some of us sometimes will get grants, even from organizations. It is now subject to taxation. Awards, laurel, profit or gain from the disposal or lending of security and digital assets. Like I told you, something like cryptocurrency, digital tokens, a lot of things that we did not consider before now. Then any from lottery and gaming operations. A lot of money is going into lottery these days. People earn a lot. In fact, I was still telling somebody today that in about 3 years ago, I was discussing with somebody. Somebody close to me. I said, how are people really? Why is it that people going to bet shops these days? Are they really making it? The guy now told me, he said, they are making it. He now told me of somebody in Ado Ekiti that won 130 million from lottery. Such money will just go like that. So a lot of money is going into lottery. But with the new tax law now, such fund will be subject to taxation, as we will see in further slides. Now, for SMEs, what's the implication? Now, any small business, what do I mean with small business? Businesses that are not limited liability. Any businesses that your turnover per annum for 1 year, if the turnover is no more than 100 million, and the asset of such company is less than 250 million, they are fully exempted from company income tax, capital gain tax, and development levy. So if you have business, whether SMEs, limited liability company, and your turnover per annum is less than 100 million, no more than 100 million, and your assets is no more than 250 million, you are exempt from any form of taxation. And anybody who does agri business, they now have startup of agri business startup. They receive a 5-year tax holiday. If you are going into agri business now, you have 5 years without taxation. Then before now, we have several forms of taxation like police trust fund. You pay educational tax. So all these have been merged, and government now reduce it to 4%. That is development levy for both medium and large firm, because small business will not pay this 4%. And graciously, the VAT still remain at 7.5, even though the committee recommended 10%, but National Assembly, in their own wisdom, they did not approve that, so it remained at 7.5. And let me tell you, this VAT rate is still one of the lowest in the whole world. Then basic items such as food, medicine, education, transport, they are now zero rated. What do I mean by zero rated? That is, the VAT on all these items is now zero. And one other good thing that we don't know, I was telling somebody, is that now you can now claim your input VAT. Now, because I'm talking to a large group of people who are not accountants, I will explain input VAT. Now, if you have gone to buy, let's say, something like table from a place now, they would have added VAT. In fact, there are some organizations, when they give you receipt, you will see the VAT, but they will not allow you to remove the VAT element, so you are going to pay total sum. But with this new law, after you have done that, you can now file for reclaim of all those input VAT that you have paid if you are within the threshold of small business. What do I mean? If you are your turnover is no more than 100 million and you have paid VAT in your cost of purchase, you can now file. You can go to the Federal Inland Revenue, file with your receipt, and you reclaim your money. And they have within 60 days to pay you that money. Now, this tax law has introduced something that we call presumptive tax. If you look at the section 29 of the Nigerian Tax Act, it introduces something like presumptive taxation. Now, presumptive taxation is talking about a situation where you cannot reliably determine income of taxpayer. There are a lot of people who do businesses without records. Many of them don't have accountants, especially for small businesses. And they have a lot of turnover. Now, for businesses like that, the tax authority is now empowered under Section 29 of this new Nigerian Tax Act to tax such company using a presumptive indications. We have indicators. They can use something like turnover, business sector, asset base, or location. They will just estimate what the fellow is supposed to pay, and they'll say, okay, go and pay this. Because you don't have records, because you don't keep necessary. So there is no way they can actually determine your taxation, but they will use their own judgment. Before now, we call it best of judgment to determine what you should pay in form of taxation. And like I told you, this thing will affect majorly most small businesses, business name, and a lot of businesses that are operating in the informal sector. Now, one of the implications of this is that sometimes it will be better if you have small businesses and you know you have a lot of turnover. You can hire accountants even on part-time basis. If you cannot pay their money, for them to just look at your records and keep your record, so that you will not pay more. Because in these with these sections of the law, the tax authority is now empowered, and I know most state governments are going to lash on this. For instance, if the state government now has domiciled this law, and they will just approach, once you don't have a professional handling your record, they can just decide to give you any amount to pay, and the person will have no choice but to pay. Then the implication is that for small businesses, they now have what is called the challenges. They now have digital compliance costs. We have limited tax literacy. Like I told you, a lot of small businesses, they don't really understand taxation. They are not having training in that area. Then how they need to even transit from informal to formal sector. And SMEs, they are filing and record keeping obligations, even though they were exempt. I was telling somebody, one of my clients, a few days ago, about VAT. You know, he runs a business that he will not actually meet up with the threshold. And I told him that, okay, notwithstanding the threshold, he told me, he said, but if I'm not making up to 100 million, I'm not paying any form of taxation. I said, you are right. But then you are to file. Because failure to file, he said, what am I going to file when I'm not actually making when I'm not paying? I said, filing is one, paying is another one. The law did not exempt you from filing. It has only exempted you from paying taxes. So we need to understand this. And I mean, a lot of small businesses are going to run foul of this. And let me tell you, penalty for not filing is now so much. I will still go into the penalty that you see. Now, but for large companies, yes, they are now faced with increased scrutiny and higher effective tax burdens. They now need to do a lot of tax planning and documentation, which becomes more critical. Development levy, they pay development levy of 4% on their accessible profits, and they have what we call minimum effective tax rates. And even the CGT has increased, capital gain tax has increased to 30%. I'll still go into details. Then they are now mandated to have what we call e-invoicing and VAT digital reporting. Let me say little about e-invoicing because it's not included in the slides. Now, big companies are now mandated to do what we call e-invoicing. Right now, they have not, the Nigerian Revenue Service have not domiciled this with all the businesses. But as time goes on, all businesses will be expected to key into this, because there is a section in the law that mandate that the person will pay penalty if he's not doing e-invoicing. E-invoicing means if you have gone to a place to buy something, it will generate e-invoice for you. That invoicing system has been connected with the Nigerian Revenue Service system in such a way that the moment it's generating the invoicing for you, the system will record at the Nigerian Revenue Service offices that amount. So by the time you go there to declare your turnover, you are just doing it for formality's sake, because they already have your turnover with them. They know how much you have generated from that. So the route of escape is no longer there, unlike what we have before now. So for large, the implication for big businesses now, they are now to pay taxes. Their corporate income tax is now set at 30%. And let me tell you, this used to be the rate before now. It was 30%, so there is no increase. Then, like I told you, before now, we pay all forms of money. You know, we professionals that will prepare this, we are the one that get to know this. You have police trust fund, you have education tax, we have a lot of levy like that. But this new law has consolidated everything into what we call development levy. So, and it is now 4%. So for large company, they are expected to pay a development levy of 4%. Then the new system has introduced something that I call anti-avoidance and profit shifting measure. Now, what do I mean by profit shifting? You know, for big business, sometimes they have income, they have revenue, they generate profit, and they can, maybe sometimes they will do a kind of, company can generate, let's say, 100 million as revenue. And they can say, okay, out of this 100 million, we are only going to declare 50 million as a profit. We are going to reinvest this. They have a way of sharing the revenue. But with this new law, it will not be allowed. That 100 million will be taken as what you are earning, and the profit on it will be shared. So this is to avoid a situation where they call it avoidance tactics that big businesses were using before to avoid paying correct taxation. Then in this new law, they have introduced something that is called effective tax rates. Now, for any company that is having turnover that is more than 50 billion or multinational, they must pay something that is called effective tax rates of not less than 50%. What they are saying is that the taxation you are going to pay now must not be less than 50% of the turnover. So if you are making turnover of 75 million euro or 50 billion, that effective tax rate will now apply to such business. Then capital gain tax have now been harmonized. The rate of capital gain tax now go pari passu with what you or the business is to pay. If your taxation band rate, your personal income band rate is 15%, so the capital gain tax you are going to pay now is 15%, unlike before that it is 10% for everybody. I will explain better in our in subsequent slides. Now let's look at this. This is the summary of the threshold for small company. If your annual turnover is less than or equals to 100 million, and you have fixed asset that is no more than 250 million, your company income tax rate is 0. You are fully exempt from company income tax. Whereas for a large company, that is company that is having turnover that is more than 100 million, and your fixed assets is not restricted, you have to pay company income tax rate of 30%, which is subject to standard CIT. Now, but for very large groups, they have to pay minimum effective tax rate. Like I told you, once your turnover is more than 50 billion, or you are part of a multinational group meeting, then you have to pay a minimum of 15%. So your tax rate cannot be less than 15% of your turnover. So this is to guide against situation where people are company they evade taxation. Now, like I told you, they have expanded the scope of our taxation, and I love to speak on this one. You know, I used to give this example when I tell people about our tax to GDP ratio that is very low. I said, for instance, if you want to do birthday and you maybe you invite Sonny Ade, and Sonny Ade tells you he's going to collect 20 million, you just pay that money without taxation. But now with the new law, such payments to entertainers, to directors, to consultants, and athletes now attract withholding tax at source. So if you fail to deduct the withholding tax, the payer, the person who makes the payment, will be held responsible. So even our footballers all over the world, they are making a lot of millions now. But with this new tax law, they have to pay withholding tax. The organization is to pay withholding tax and remit to Nigeria. Then a notable provision is the 5% final withholding on fee paid by Nigerian startup to non-resident provider of technical, professional or consulting services. What do I mean by non-resident? That is, if you are giving technical services to people who are not in Nigeria, to expatriates, to professional or consulting services that are not in Nigeria, now you are expected to make a provision of 5% final withholding on the fee that you pay to them. Now, if you look at the section 34, now I decided to expand this area to explain better. You know, at the beginning of this year, there was a lot of issues with respect to people who have shares in various companies. People who are, how people are jittery that they are going to tax their fund and they are going to tax them. That's why I brought this out. Now, section 34 deals with this area. It now talks of when you make gain from the sale of transfer of shares, they are taxable. You know, when you sell shares now and you make gain in a year, they are taxable. But look at it, there are conditions. You know, even the structure and the rate have been changed. But you now need to see, you know, this is what people saw, and everybody began to withdraw their money from stock exchange, that stock exchange lost a lot during the December time before it was explained. Before such fund could be taxed, I want you to listen to the condition. Number one, you must make a sales that is not less than 150 million. So it's not that you have just done transactions, you have sold shares of 2 million. No. Your cumulative shares per annum must be more than 150 million. And the gain you would have made from that share should not be less than 10 million. So unless those two conditions are fulfilled, your whatever gain on your stocks will not be taxed. So you need to have a cumulative, that is from January to December, you must make a total sales that is more than 150 million. Then you must have made a gain of nothing less than 10 million from it. Then another condition is that you have made this if you have not reinvested, because somebody can make a gain of 10 million and decide to use that 10 million to buy shares. If you have done that, you will not be taxed. But if you have not reinvested that money into the stock exchange and you are making gain of more than 10 million, you'll be subject to taxation. Now let's look at the old capital gain tax, because that one is very important, and I've decided to expand on it. The old capital gain tax, especially on stock, have been reformed. And look at it. Before now, we have something that is called Capital Gain Tax Act. But like I told you, all these taxes have been merged. So we are not having a lot of, you don't need to read several books now. With the new capital gain tax, is now governed by Nigerian Tax Act. For companies before, they pay 10%. But for company now, any company that the taxation rate is 30% will now pay 30% on capital gain, on any capital gain. For individual, before now it was 10%. But now, if you are within the band of the exempt, for instance, if my income is not more than 800,000 per annum, that shows even if I make a capital gain of more than 10 million, I will not be taxed. If my band rate is 15%, I will be taxed up to 15%, and that is why up to 25%. Then shares now as taxable asset, yes, but they have limited application in our previous tax law. But now it is explicitly chargeable according to that section 34. Then exemptions was limited in the old capital gain tax, but now any proceed that is more than 150 million and the gain is more than 10 million is now taxable. Reinvestment relief was limited, but now if you reinvest whatever you make in form of gain, you are expressly exempted. Then indirect offshore shares transfer, that is, if you are transferred shares, let's say from Nigeria to another company, to another country. Before now, it was not taxed, but now it is taxable. And before, in the old regime, when you are talking of assets, you are talking of maybe motor vehicle, building, but now asset has been expanded to include something like digital assets, indirect assets. Now, like I told you, one other thing that this reform has brought is the establishment of a tax ombudsman. Now, from time to time, we are consultants, sometimes they call our clients for tax reconciliation. You begin to argue. As a matter of fact, if you are not a professional, if you go for tax reconciliation, you are likely to conceive today. I have a situation one day. I follow a particular client for reconciliation, and they insisted they were going to collect 2 million. I told my client, just don't agree 2 million, just say 1 million. But the way they were saying it, so they considered to 2 million. So you need professionals, and that is why, because so many people, small businesses might not be able to hire accountant. So that's why the new law has created office of ombudsman, which they will have a phone number. You can always call them when you have issues with the tax authorities. You can speak in any language. They will attend to you, and they will take your case up free of charge to resolve, so that to ensure that you are not unduly taxed. Now, I will talk on cross-border and international tax issue. This area is very important, especially for people in diaspora. Number one thing I want to tell you that any remittances, people, we have something that we call direct remittances, foreign direct remittances into Nigeria. It is not, there is no taxation on it. Before now, news were going around, if you send money home, it's going to be taxed. No. If you remit any money, you send money to Nigeria from wherever you may be, it is not subject to taxation. However, if such money is invested, a lot of people are in the diaspora, but they are having investment in Nigeria, sending money home for one business or the other. Such revenue from that business will now be taxed if they meet residency and source rules. I will still explain residency rule to you in our subsequent slide because it's very important. If you send money into Nigeria and you are doing business in Nigeria, for business in Nigeria, whatever revenue that is generated from that business will be subject to tax if you meet residence rule. And this law introduced something that is called control foreign company rules. Now, let me explain control foreign company rules. It's talking about that some businesses that have their parent body abroad. You can be running a business in Nigeria and the parent company is abroad. And sometimes they will have profit, but they're supposed to share parent body when they have profit. Let's say 100 million, they're supposed to share to the home company. But to avoid taxation, sometimes they will not share it. But with this new law now, it will be assumed that such profit has been shared, and the company will be made to pay what is due in form of taxation to the government of Nigeria. Then digital services are now subject to Nigerian VAT. Then taxation of indirect offshore share transfer. If you transfer shares abroad, you now need to pay taxation on it. Now, the main focus of this foreign remittance is for us to know that income that we earn from remittances when we invest or repatriate through assets connected to Nigeria, the tax now is focused on the income that you use the money that you have remitted to earn. That is what they are going to tax. It's not the money you are sending, but if that money is going to be used for investment or business, whatever income that is generated from that business will now be subject to tax. So remittances themselves are not taxed, but income that you generate from them will be taxable. Now, in summary, when we are talking of tax treatment of remittances, personal remittances sent by Nigeria in the diaspora are not taxable. So this is to protect families. But digital transaction reporting, banks, now this one is very important and I want us to pay attention. In your individual accounts now, from this moment, within 3 months, if inflow into that account is more than 25 million, the bank official has responsibility to report to Nigerian Revenue Service that this Dr. Oluyori is having more than 25 million from January to March. We discovered that what came into his account is more than 25 million. They will report. If the account is for business and within 3 months they look at the inflow and it's more than 100 million, they now have obligation to report to Nigerian Revenue Service. What's the implication of this? The moment inflow into your account is more than 25 million, they want to suspect maybe that account is for business. Okay, yeah. Sorry for the disturbance. Now, so they are suspecting that such account might be used for business. And the moment they verify and discover that it's not for business, the account is will not be tampered with. I think the person is doing it again.
Yeah, the person is CJ. I think we need to remove the person from the group.
Okay. Now, for any account that is a company like that is having turnover more than 100 million within 3 months, the bank now has obligation to report to Nigerian Revenue Service because they are suspecting that such account might be for business purpose, and they now want to verify whether such an account has been registered for taxation. Otherwise, the account will be the person will have to face penalty. Then control global minimum tax. So control foreign corporations. Now they now have their undistributed profit tax, and the this double taxation agreement is still reaffirmed with the new tax law. Now, what does this mean for all of us, Nigerian in the diaspora? They need clarity on residency status. And that's why I'm going to explain. Because now with this new tax law, all the worldwide income is now exposed to taxation, unlike before. So whether you make income anywhere in the world, the moment you have satisfied the residency rule, all your income will be subject to taxation. Now let's look at the residency rule according to the new tax law and worldwide income. Now, a resident individual is taxed on worldwide income. What does that mean? The moment you satisfy this rule, no matter wherever you have made your income all over the world, it is subject to Nigeria taxation. Number one, if the person is domiciled in Nigeria, if you are living in Nigeria, like I live in Nigeria now, even if I make income, if I make this thing from America, it will be subject to tax. If it has not been taxed in Nigeria, or where there is except for a situation where there are double taxation agreement. Then number two, if your permanent place available for your domestic use is Nigeria, somebody might not be in Nigeria, but he has a permanent place for his domestic use in Nigeria, such person will be considered a resident individual. Then if you have a place of habitual abode in Nigeria, or where you have substantial economy and immediate family ties in Nigeria, if you live in Nigeria for nothing less than 183 days in a 12 months, within a year, if you stay in Nigeria for not less than 183 days, you'll be considered a resident of Nigeria. Then if you are a diplomat serving in any part of the world, you are in Nigeria. So once you satisfy this rule, your income anywhere you can make it will be subject to taxation in Nigeria. Now, what is the compliance, enforcement, and administration? Now, filing is now mandatory. You are expected to keep digital record, especially for large company and real-time VAT reporting. Then, tax authority has been empowered to conduct inspection, audit, and enforce compliance under stricter penalties. Then, individual now have to have a tax identification number. I told you that they are going to use our PVN, but for businesses, it is compulsory. And they now have a statutory joint tax board to harmonize tax enforcement across federal, state, and local authorities. Now, what are the opportunities, challenges, and strategic responses? Now, the opportunities that we now have opportunity to broaden our tax base to improve the revenue for the country. And the challenge is that we now have a higher compliance cost because they will now be running after companies to ensure that they do the right thing. And we need to invest in tax automation system. And like I told you, e-invoicing, for you to key into e-invoicing now, I think minimum is about 15 million to do that because some organizations have been certified to provide that. Then for small company, they now have exemptions, even for exemption and relief for low-income earners. But the challenge is that misunderstanding. Most of people in this category, they know little or nothing about taxation and even the provisions available to them. So there will be need for public awareness and stakeholder education campaigns. Then we need opportunities for us to now align our taxation with global best practices. So, but the challenge is we now have complex residency rule, like I've read to us, and cross-border tax implications. You know, when you bring funds from one country to another, what's the implication? So we might need to develop specialized tax planning strategy, especially for diaspora individual and multinational enterprises. Our VAT administration has been digitized with mandatory e-invoicing. You know, the challenge is the risk of penalty for non-compliance, and they now need to conduct regular internal audit and upgrade compliance. Now, if you look at our withholding tax rates, now I brought this one out because some of us might be involved in construction and some other thing. Now, before now, they have modernized, they have reviewed our withholding. So for professional management, technical and consultancy services like engineering services, accountants, lawyer, before in the old rate, it was 10%, but in the new rate is 5%. Other services, before it was 5%, new withholding tax is now 2%. For supply of goods, if you supply goods now, withholding tax on it before was 5%, but now it's 2%. For construction of roads, bridges, before now it was 2.5%, but now it's 2%. For higher rental of equipment, 5% in the old rate, 2% in the new rate. For telecommunication, it's 5% in the old rate, but in new rate, it is still 2%. For director fee, it is only the director fee that was increased from 10% to 15%. All other taxation remains safe, like rent on land, especially for large company. For small company, your withholding tax on your rent is 0. So an individual is 0. But for big company, you now pay a withholding tax of 10%, dividend 10%, interest, royalty, and commissions. Now, for Nigerian resident and non-resident, these are the rates for the new withholding tax, especially for some of us that are into construction or we are having our own companies. Now, let me now talk on penalties. Now, I know in most of the in most of the talks around taxation, they decide not to talk on penalties because it will put people off. But as a professional that into taxation, I'm interested in this area because it will allow me to guide my client rightly. Now, for anybody that failed to register for tax, whether VAT, I told you, I said to my client, I said VAT, I sent a message to him, I said, you will now pay a penalty of 50,000 for first month and 25,000 for each subsequent month of default. So if you have not filed VAT for January, it will be 50,000. So for February, it will now be 25. So you will now pay 75. By March, it will become 100. By April, so it will just be acting cumulatively like that. And each month will be running concurrently. If you award contract to unregistered vendor, what do they mean by unregistered vendor? Anybody without TIN. If you now award contract to them, you are going to pay penalty of 5 million per infraction. If you fail to keep your proper accounting records, the company is 50,000 penalty, while for individual is 10,000. If you fail to file tax return, what do they mean by tax return? By the end of the June now, you are expected to have filed your returns for last year. No, this one is even registered. File tax return means, for instance, for your VAT and for your company income tax. For your VAT, you are supposed to file it every month. So failure to do that, you are going to pay 100,000 for first month and 50,000 for each month, even if you are filing nil returns. I advise all my clients, in fact, some of them, they pay me to file for them every month. Those people especially those ones that file nil return, because what you now pay now is too much. And Nigerian Revenue Service now, that's where they are hiding, especially for small company. The penalty will be there. Then if you have late or incomplete returns, it's 100,000 for the first month, then 50,000 for subsequent month. If you don't have e-invoicing, this one, for now is for the large company. They will pay 100 up to 500,000 for false default, and they can be even suspended subsequently. Then failure to deduct tax at source. You are paying somebody. For instance, I talk of even musicians. You want to do your birthday, you are inviting IFLA there. You are expected to withhold the withholding tax from source. If you fail to do that now, you will pay 40% of that tax not deducted plus the tax. Failure to remit deducted taxes, you pay the principal tax plus 10% administrative penalty per annum and interest at prevailing CBN rate. For criminal non-remittance, the person he can now go to jail for 3 years or fine equal to the principal plus up to 50% penalty. Failure to notify change of address. You know, before now you can decide to change your address, but now if you change your address within 1 month, you are expected to notify Nigerian Revenue Service. Failure to do that, the person will be charged to 100,000 for first month and continue monthly until compliance. Then if you deny access for your tax technology deployment, maybe in your company you have electronic system and you refuse Nigerian Revenue Service from deploying their technology, you are going to pay 1 million penalty for first refusal and 10,000 per day until you comply. If you make fraud or false declaration, you are going to pay minimum of 2 million fine or up to 3 years imprisonment or both. So late payment of tax will be linked to CBN monetary policy rates. And for corporate officer liability, that is maybe so your company, you have failed to register for tax or you do not do your normal taxes as expected, the director or manager may be personally liable and they can even go to jail for this. Now, the opportunity that this reform has created for us, now have opportunity to widen our tax base, to improve the transparency, and now new and even new advisory opportunity for professionals, which is what this organization, Nigerian Society of Engineers in the Saudi Arabia is doing. Then Diaspora investment potential has also been guaranteed. Now, what are the key takeaways from this presentation of today? It has now been made known to us that the new tax law has shifted towards a modern, digitized, and progressive tax system that will affect individual businesses and Nigerians even abroad. So this, unlike what the tax system we are running before, what we are having now will affect everybody. And compliance will be more digital and data-driven. You know, a situation where you just go to them and lie and say, this is my income, is becoming thing of the past. Now, data will be generated digitally. I told you about e-invoicing. As you are making the payment, tax people, they are seeing it. Then you might need something that is called proper planning to reduce risk and costs. So I want to thank every one of you for listening attentively. Thank you.
Thank you so much, Dr. Oluyori, for this insightful presentation. And
Thank
we
you.
call upon Engineer Dr. Salami now to moderate the question and answer session.
Thank you so very much, Dr. Babatope. And I want to use this opportunity to thank Dr. Joseph Oluyori enormously for this clear and engaging presentation. It's highly insightful presentation on the new tax reform. The way you broke down the complex provisions into simpler practical examples made the topic very easily understandable for me, being a non-financial individual, and also I could speak the same for everybody on the call. I just want to summarize some of the 5 key takeaways I took from the presentation. Number 1 is there's a shift towards a fairer and progressive system. If I'm right, Dr. Oluyori, please correct me.
You're right, sir.
Yeah, the second point is there's a strong protection for low-income earners and the SMEs in the Nigerian market space. The third thing is there's a broader and clearer tax base where we have digital income, cryptocurrencies, winning grants, digital assets, and certain share transactions that are now clearly brought into the tax net. So the fourth one is there's modernization. Digital administration is present in Nigeria, and we have electronic filing, a BVN, TRN synchronization or connection now, the mandatory e-voicing for large businesses, and stronger data reporting by banks, which is aimed to close all leakages and improve transparencies within the tax net. Then the fifth one I'm able to scribble is we have stricter compliance and also penalties now in place. So thank you once again for such an enlightening and impactful session. As the chief moderator for the Q&A, I want to ask the first question. As somebody that has experienced Nigeria, and Nigeria has happened to can we trust this new system within the tax net? Thank you.
Okay, should I answer now?
Yeah, you can note that while others also
Okay.
put their questions, you can put it in the chat box. And
all right.
if you can do that,
and
we
also,
can raise our hands.
Sorry, sorry to interrupt again. I want to ask in line with the first question asked. The speaker has done justice to the topic, but one thing he did not mention: how safe is this taxpayers' money in the hand of Nigerian government? No, he didn't mention anything about because we have a lot of leakages. They collect tax in Nigeria, but this tax went into people's individual hands. So please, this in addition to the last question asked, please add this one too.
Okay, thank you very much, our Deputy Chairman for the branch. Dr. Adeomi Adeshina is raising his hand. Can you quickly ask your question?
Thank you very much, Dr. Salami, and thank you very much, Dr. Oluyori, for the very informative section. I have 2 questions. The first question is that Nigerians in diaspora, is it a must we file our tax? Even though I'm not expecting to pay any amount, is it a must we file? Then secondly, the politicians, senators, House of Rep members, even the president, from the salary they are collecting, are they going to pay tax? Are they going to fall into the tax net from the salary they are collecting from the government? Thank you very much.
Thank you very much. I think we need to give time for our speaker to answer these 3 questions. I think they are interrelated. Go ahead, Dr. Oluyori.
Okay, all right. Thank you so much. Now, let me start from the last one, saying whether the politician like president, the senators, will they be subject to tax nets. Before now, in the old tax law, that is, I'm talking of the one before the last personal income tax was passed into law in 2011. But the personal income tax before that time exempted president, deputy, vice president, governor, deputy governor from payment of taxes. But in the law that was passed, the one that was passed into law in 2011, signed into law by Jonathan, brought them back that, okay, president, vice president, governor, and deputy governor will now be subject to tax. Now, and in this new tax law has not removed them from taxation. So in sequel upon this, I can tell you that their salaries, the salary of president, that of the vice president, governor, and deputy governor will be subject to taxation. But meanwhile, you agree with me that it's not even salary that people look for in that offices. They have something more than salaries. But their salary is always very small. Like somebody who became governor and he was surprised when he saw his salary. So, but you agree with me that there are some other perquisites of office that are not subject to taxations, which are more huge compared to their salary. Now, for Nigerian in diaspora, a question was asked, is it a must that you file your tax? Now, if you are not having any business in Nigeria, you don't need to file any tax. You can just remit your money down home. But if you have business running in Nigeria, it becomes a must for you. That business must file tax. Then if you satisfy the residency rule, that is, if you are in Nigeria for more than 183 days, you will now be expected to file taxes. For instance, government like Lagos has digitized their tax filing. So, and failure to file necessary taxation, the person will be subject to penalty. So for any, if you have business in Nigeria, it is compulsory for you. But if you don't have business in Nigeria, you are not under any compulsion to file tax. You can just remit your money home. That's fine. But if you satisfy the residency rule, you must also file. But if you don't satisfy residency rule, you are okay. Now, another person asked, how safe is this money in the hand of Nigerian government? I will equally ask the question myself. But before now, because we are not paying the right taxes, people have not really been standing up to our government demanding for their rights. But I want to believe that now, if everybody is paying what is due to him or her, then we can even stand tall to our government to ask for our rights, ask for, how the tax payers' money has been, where they have been putting it to. So we will now have the right and the audacity to speak bold to the government for our rights. But even for now, I don't think there is. We only talk of the tax reform, and I want to believe that as time goes on, all of us will be able to ask the right question as it is being done in the Senate line. Then somebody asked, can we really trust this new system? Okay, yes, let me tell you, even though there is no perfect system anywhere, I'm sure we were aware of taxation scandal, even of the current president of America. That's to tell you that there is no perfect system anywhere, but we can work towards perfection, which this system aims at. It's a good attempt, and we want to believe that if we keep it up, we'll get to a system that our system can be perfect. But for now, we just can't say, well, because we don't have perfect system, we are not going to try. No. But this system now, we are working towards a perfect system. We are working towards modernizing our system. I want to believe that we'll get there one day. Thank you.
Thank you so very much for an elaborate and clear answer to those questions. We appreciate that, Dr. Oluyori. I'm going to pass the baton to Dr. Abatope to ask his question.
Yeah, thank you so much, Dr. Oluyori, once again.
Can you speak up, sir? Your mic is not so clear.
Do you hear me now? Hello?
Go ahead, we'll try. Yes. I hope Dr. Oluyori can hear him.
Yeah. Yes, I can. I'm trying to do so.
When you discussed these residency conditions, there were about 8 of them you gave. So is this all inclusive, or if you meet any one of them? For example, I have a usual abode in Nigeria. If I go home, I have where I stay, which is usual for my use. However, I don't stay more than 80 days at any time in a year. Do I classify as residency for tax purposes or not?
Okay. Thank you,
all
sir.
These conditions, or if you meet just one of them?
Okay. Thank you, sir. If you meet just one out of the conditions, you are classified as a resident individual. Just one. You don't need to meet all the conditions, but just one out of the conditions. For instance, if you are a diplomat anywhere in the world, you become a resident. If you live minimum of 183 days in Nigeria in a year, you become residents. If you have economy and immediate family ties in Nigeria, your wife, your children, they are in Nigeria, and you have your businesses in Nigeria, even though you live abroad, you'll be considered a resident of Nigeria. You have a place of habitual abode. That is okay. You have a place that you are always there. Then you'll be considered a resident. And if you have a place for your domestic, that is where you normally stay. And if you domicile in Nigeria, I know this system is not perfect. Like I said, we are working towards perfection, but these are provisions of the law which we need to be aware of. Thank you, sir.
Thank you so very much for the response, sir. Over to you, Dr. Yaya Gambo.
Thank you so much for a very insightful presentation. My question is actually around how really this new taxation is helping those ones that are the low-income earners in real sense. I understand from your presentation that if someone earns less than 800,000 per annum, he's exempted. But then the VAT system, because he has to make purchases of grocery, he has to make purchases of other things, or some appliances. So how does it really makes this person protected from the new law? Thank you.
Okay. Thank you, sir. Now, this, if you look at the whole of this new taxation reform, is actually for low-income earners and small businesses. Now, you make mention of VAT. The one you refer to are what we call VAT input. The law understand that even though they have been exempted from payment of taxation, sometimes they incur some taxes systematically, like they will go ahead to go and buy some things. But in the new tax law, there is a provision for recovery of such taxation. Once you are able to keep your records, once you are doing your filing, the law allows you now. So now, with all your receipts and everything, you can reclaim all those amounts you have paid. Then, the law has looked at some essential things like your health, food, rent, and they have exempted taxation for individual. But peradventure, you have gone to, take rent somewhere and they have added VAT. What you just need to do, if you are doing your filing with the government regularly, you just bring all those things up and you take it to government, and they are within 60 days by this new law to refund. So the law actually protects small businesses, I can tell you that, and low-income earners. As a professional, as a tax practitioner, I can tell you 100% that this law is actually for small businesses and low-income earners. Thank you, sir.
Thank you very much. We have another question from Dr. Nasir Tukur. Go ahead, sir.
Okay. Thank you, Dr. Oluyori, for wonderful presentation. My question is regarding the 25 million, which you mentioned that when it is transferred to an account, that account will be a subject of investigation by the Nigerian Revenue Service.
Yes,
is that
sir.
Correct?
Yes, sir.
Yeah.
That's correct, sir.
Yeah. Could you elaborate on that? What will the Revenue Service do to establish whether that money is for individual use or it is for business? Exactly, if you have any insight on how are they going to investigate?
Okay, all right, thank you. Now, like I told you, in this new tax law, individual accounts, maybe account that belongs to Dr. Oluyori now, from January to March, they will look at inflow into that account. If it's more than 25 million, my bank will tell the tax authority people that, okay, Dr. Oluyori is having an account that what goes into that account is more than 25 million in 3 months. Now, this will put that account on inquiry. What are they going to do? Now, they are probably going to get across to me and ask me to find out whether the account is not being used for business. Sometimes they will look at inflow. If you are using an account for business, there is a pattern of inflow that that there's some regularity in inflow that you suspect that this account is not likely, going to be for personal purpose. But if they get across to you and you are able to substantiate that you are not doing any business, you can be sure that you will be free. There won't be any other issue. Then if the account is for company, now, okay, let me say this. A lot of people, they use their personal account for business. We have it in Nigeria, especially small businesses. You have a lot of people running it on their name. You go to even hotels. Sometimes you want to sleep in an hotel. You ask them to give you account number. They give you personal account number. Now, over time, when that's a personal account number that ordinarily they expect that inflow into that account should not be more than 25 million. Once it's more than 25 million, they will now tell them at Nigerian Revenue Service, and they will look at it, to see whether the account reflects that of business. If it reflects that of business, they will get across to the owner to come and substantiate that this account is not for business purposes. Now, for company, that of company is easier. If you are having a company account and the inflow into it, maybe Oluyori Nigeria Limited, and the inflow into it within 3 months is more than 100 million, what they need to do with their system, they will just try to input Oluyori Nigerian system, whether it is registered for taxation. If it's not registered for taxation, they can flag up that account. They can even apply to court to lien that account because their account has not been registered, and the person will be asked to go and pay the normal taxes and penalties. So we still don't know how they are going to go about it, but we have the provisions in the law and which has given them that power. So how they are going to exercise that power, time will tell. Thank you, sir.
Yeah, I have a follow-up question on the same
All right.
25 million, if you
Yes.
don't mind.
Okay, sir.
Just a follow-up
Yes.
question.
No. Yes, sir.
Okay. Suppose I am in diaspora
Okay.
and I send an amount which is greater than 25 million within 3 months.
Yes.
Now my account is under or is a suspect, or it will be reported to the Nigerian Revenue Service.
Yes, sir.
And I take most part of that money and invest it in the stock market.
Okay.
Now, the question I have is, will that be considered that money as business?
No.
Would I have to pay tax, or what's the situation?
Okay, thank you. Now, the money you remit into Nigeria is not considered for taxation, even though if it's more than 25 million. No. But when you now invest into stock, now the money is going into another line of investment, which is stock now. They will now consider that, okay, in your stock, by the time you are selling your stock in a year, do you make up to 150 million? If you make, if you sell stock of up to 150 million and you are making a profit of more than 10 million, you will now be subject to tax. But if you, even though you invest into stock and you are not selling up to 150 million, your profit is not up to 10 million, you are not subject to taxation.
Clear. Thank you very much.
Thank you, sir.
Thank you very much, sir. We have some questions in the chat section. We have 2 of them before I call on Dr. Kilako. The first one is, how would Nigerian in diaspora file their annual tax? Is there any website to file for personal tax? I want to read the second one. Maybe you can pick them together. The second question says, or reads, as a diasporan who hired the services of a contractor based in Nigeria, am I obligated to pay VAT on the services hired?
Okay. Now let me ask for clarity. The second one, the person hired contractor.
He hired the services of a contractor based in Nigeria.
Okay.
He is a diasporan. So is he obligated to pay VAT on the services that he hired?
No, it depends on what they are doing, what the contractor you have hired. It depends on services that contractor has been hired to perform. Some services, payment of VAT is service determined. Some services attract VAT, while some services do not. For instance, if you hire a contractor to go into health sector, maybe to do supply, maybe medical equipment, the person will not pay VAT, or to supply maybe school books. But if you have hired contractor to build house, definitely the contractor will have to pay VAT. So it depends on the services. VAT payment has to do with services. There are some services that are VAT exempt, while some services you are going to pay VAT. So, and those that are VAT exempt, like I've told you, like health, education, agri services, they are VAT exempt. Food, basic food item, they are VAT exempt. But all other things, you are going to pay VAT on them. Now, how Nigerians will file taxes? Yes, they are in 2 categories. If you are in diaspora but you have business in Nigeria, there will be a need for you to have a professional. For instance, okay, I have companies that their owners are not in Nigeria that we file for them, because it is, the business is an individual. The owner is another person. But if it is for individual taxation, now because the body that handle that of individual is state government, while that of company goes to federal, each state government, they have the way of handling it. I think the most digitized one now is that of Lagos State. In Lagos State now, you can file your taxation anywhere, but that is not applicable to all states of the federation. So there might be need for that person to have a consultant down home here to help him or her to do the filing if the state government is not doing. But for company, it is very essential to have a professional in Nigeria handling your taxation system because of the complexity and the intricacies that is involved. Thank you.
Thank you so very much, Dr. Oluyori. The time is fast spent, so I'm going to take the last question from our able Dr. Kilaku. Please go ahead.
Oh, thank you very much, Engineer Dr. Salami, for the opportunity. I want to thank the presenter for this insightful presentation. My question is for a diasporan whose family is in Nigeria and he has a house in Nigeria where they stay. If he remits money to Nigeria to the family and use that part of that money for stock, so how does his money get taxed? Because you said when your family is based in Nigeria, they will be taxed because they consider you as a Nigerian domicile, something like that. Thank you very much.
Thank you. All right, thank you, sir. Now, if you have your family in Nigeria, maybe you have your wife in Nigeria, you send money to your wife. That money does not belong to you again. The person that is going to account for that money is your wife. But it's different from you having an account in Nigeria. You are just sending money there. It's different. But you can decide to send money to your wife or send money to your children. They are the one that will account for it, for such money. Now, and let me tell you, if you send money to your wife, for instance, now, such money is not going to be taxed because that money has not gone into business. It is like a gift to her. So the such money is not going to be subject to taxation. Even if you are sending 100 million to her or 1 billion, it will not be subject to taxation. But if that money is now invested or put into business, that is when we'll now be talking of taxation. Now, if you send money and the money goes into stock, like I said, when it comes to stock, they will look at, okay, have you sold stock up to 150 million in a year? If that is yes, then they want to look, do you make profit of not less than 10 million? If it is yes, then you will be taxed. But if you are, even though you have gone into stock, but you have not traded up to 150 million, you will not be taxed. And your profit is not up to 10 million. Your money is tax exempt.
Thank you very much, sir. It's very clear. Thank you.
Yes, thank you very much, Dr. Joseph Oluyori. We thank you for honoring our invitation for this beautiful presentation and the level of clarity you brought to the Nigerian tax reform. I really, really enjoyed it, and I've gained so much from this presentation, and I believe this is the same for every one of us on the call, both the financial people and also the non-financial people on the talk. So on behalf of the NSC Eastern Province branch, we want to say a very big thank you for delivering a very important presentation to the community. Thank you so very much for honoring us once again. Thank you, sir.
Thank you.
So on this note, I pass the baton to Dr. Babatope or Dr. Moise to go ahead with the next line on the agenda. Thank you.
Thank you so much, Dr. Salami Babatope. Just on a lighter note, I know that I think this is food now for accountants.
We can't hear you, Dr. Babatope.
I said on a lighter mode now, this is food for accountants in Nigeria now. So accounting will now become a very highly important profession.
Exactly.
Yeah. All right. Now we call on Dr. Muiza Nibire to please give a vote of thanks on behalf of our branch.
I will suggest let our vice chairman do that, please.
Okay. Professor.
Yeah. Hello, can everyone hear me?
Yeah, we can hear you, Prof.
So, well, I would like to say good evening to everyone, especially our invited speaker. By name of, I think the name is Joseph, right?
Dr. Joseph Oluyori.
Yes,
Yes, sir.
yeah, we welcome you and thank you very much. First and foremost, I would like to express my heartfelt gratitude to our speaker for, despite his tight schedule, he was able to be present here with us to share such a very educative and invaluable insights about accounting. Although we are all engineers, somehow, some way also we are economists, we are accountants, because in any project we have to account for everything. The topic is really highly enlightening, it's timely because there's a lot of misinformation about this tax. Sometimes I'm painting, I say the little I'm earning here, the government is going to collect it from me. So with all this information now, I think it's a bit clear. And I wish also to extend our sincere thanks to the chairman, his ESCO, for organizing such events and also making the event a reality. And also the technical secretary for finding time to seek for such a very valuable speaker to assist us and give us a very insightful knowledge about this tax, because really, I don't know, the tax is highly politicized. There is so many information. We don't know which one is true, which one is which one is lie. So once again, Dr. Joseph Oluyori, thank you for coming to share this information about Nigerian new tax reform, implication for individual businesses in diaspora. Once again, thank you very much. We wish to at least schedule another meeting with you so that surely the aspect of what are we going to do as a citizen to make sure that this money collected from Nigeria is put into good use. This is the next topic we want. One day, inshallah, we invite you so that you give us another topic on this issue. Thank you very much, everyone. And I wish everyone, how do I say it? I wish everyone, as all of us are at home, is online. So I wish everybody a good night. Thank you very much.
So I want to quickly call on our branch chairman to present the certificate of appreciation to Dr. Joseph Oluyori. I had to do that, Dr. Babatope, because of your mic. Please accept my apology. Thank you.
On behalf of Nigerian Society of Engineers, Eastern Province, Saudi Arabia, we want to thank and appreciate Dr. Joseph Oluyori for this excellent, timely lecture, and kindly accept from us certificate of appreciation on the lecture delivered titled Nigerians' New Tax Reforms, Implications for Individuals, Businesses, and the Diaspora. Thank you very much, and looking forward to honoring our invitation when next we do that. Thank you very much. Thank you.
Thank you. I appreciate you all. Thank you, sir.
Thank you very much, sir.
It's time for our photo.
Yes,
Yeah, it's time for our photo. Yeah, Dr. Adeshina, or whoever is in charge.
With the
please, let's turn on our cameras so that we can see our beautiful, handsome faces.
In the certificate, let's stop sharing the certificate. Who shared it? That's okay.